Okay, welcome back, everyone. Today it's time to talk some Bitcoin. We're going to take our time today and we're going to see what's transpired over the past few days. And we're going to go through a few trades, some of which I have been in, some of which I have not been in. And we're just going to have a dialogue as to, what you could have been looking out for, how you could have capitalized from the market over the past few days and over the weekend. So, first things first, don't forget to hit the follow button, hit the like, hit the subscribe, wherever floats your boat. Now, let's see. So as of our last post, this was 4 days ago, quite a while back. I posted something saying free money in my next trades, and what were they? Okay, so we can clearly see that without a doubt, we broke out of this range. It was a mediocre break. We came back in for a nice little retracement. We flipped market structure there, breaking back up, leading us, to this tiny external range at the range high, but still not quite past our deviation threshold. And we were looking for a deviation of the range high, deviation of the range low. We had some internal demand zones over here that we could get a bounce from. And then we had below us, we had these nice little zones. We had a nice, 1 hour zone. And then we also had a 45-minute zone that was confluent with our value area low as well as our POC. Now, the interesting thing about that zone is that that was reinforced by this green box over here. And you're thinking, what does this green box represent? Well, I'm not a fib basher, but Leonardo Fibonacci, I'm joking, that's actually not who it was who created a fib. But anyways, um, this is basically a box, and inside our box, at the top of our box is our 65% retracement level, and at the bottom of our box is our 78.6% retracement level. I've just found, after numerous backtests and backtests and backtests, Bitcoin likes to respect that zone. Now, don't get me wrong, sometimes it bounces off the 38, sometimes it bounces off the 50%, but I would say most impulsive move, most expansion legs, you're going to get a reaction at that zone. Okay, so that's what we were looking out for to potentially to get into a trade, and we all know this. As far as our confirmation goes, we're waiting patiently for a market structure flip before we look to enter any of these zones. All right, so let's play. Let's see what happened. So we didn't quite rally all the way back down for these zones, but what did happen is we got a nice deviation long play. Okay, so this play, so trade number 2 would have been a very, very nice trade, and we're going to look at the risk reward on that trade at the moment, and it looks really juicy on that one. All right, but a trade could look juicy doesn't mean you had the opportunity to enter that trade. And what do I mean by that? Well, if you didn't get your confirmation, your preset confirmations, you're not going to be in that trade. You're not going to break your rules, violate your rules to enter a trade just because it looks good. You have to wait for your confirmation. So we're going to take a look. It was around, 5 o'clock on the 20th. So we're going to go back, use the bar replay tool, and go back to exactly where that price was. I believe it was around here. Yeah, I think it was around here. Okay. All right, so what we have here is we can see here now that, okay, yes, we've got a nice little range deviation. All right. It goes without saying, we are aware we have this pool of liquidity below us, but we're also aware that this pool of liquidity is tending up. It's tending up, and it's quite a bullish one. Okay, hence we saw that break in the structure to the bull side. But, we're also aware that as we're approaching this, top of our range, we could get some sort of manipulation play where we have some trap longs reversed, and then we get a nice little expansion down to the range low. But it goes about. Let's talk about this. Let's see. So obviously, I think this was our range. This was a zone we had. Let's see if we got an entry. That's all we want to know. If we got an entry and how much we would have made off of that one. That's the only two questions. Those are the only two questions I'm interested in right now. All right. So all right, let's see. We came. All right. So this was the entry we are looking for. So we're seeing, did we get a confirmation in here? All right. Let's zoom in. So we go on to the 5 minute. As we drop down in time frame, go into the 5 minute, what am I looking for? Well, I'm looking for a clear market structure flip. So at the moment on the 5 minute, our structure undeniably looks like this. Well, we have a low here, a high here, and a low here. Okay. So what that means is we cannot really justify a trade, at least not a range trade, until we reclaim this level here. And ultimately we do on the 5 minute, okay? But I'll be honest, if I'm looking at this trade in a live environment and I'm thinking, right, I would like to enter a trade right here, and my first aim for this trade is simply to be this high here, I probably will not enter that trade. Why? Because the risk to reward analysis just doesn't make sense. All right. So we're risking, look what we're risking. We're risking all of that just to make a 28% gain. Because let's not kid ourselves. That is the target of this trade. Yes, it could carry on going up, and that's exactly what happened. But we don't know that. We do not know that, and we can only play based on what we know, right? So yes, if you enter that trade off of that risk to reward, all power to you. I wouldn't have entered that one. I didn't enter that. But was there an easier way to enter that trade? Could we have looked at this expansion leg on the way down to see if we got a flipping structure? So what we do now is we drop down to the 2 minute, and let's have a look at what a 2 minute structure is like. So the 2 minute structure, slightly more definite. It says we've got a lower low, a lower high. I believe this is a lower low. Oof, I want to check that in a second. Lower high, lower low. So again, as far as the 2 minute break in structure, you cannot, will not, should not justify a trade until you reclaim that level. All right. Now, what's the difference between this level and that? It's not much. All right. So you go from a 28% gain entering there to maybe about a 56% gain. Is that really worth it? I don't think so. Okay. All right. Yes, we could have had a bit of a retracement. We could have come back deep. Let's see how deep we came back. All right. Let's say if we were ninja traders and we actually got the absolute bottom of that retracement. Okay. It's still giving us a 1.32. All right. Is that worth it? Is that viable? I mean, if you just want to make whatever you put in, you put 1K, you get, 1,300. That's fine. That's fine. But is that a trade I'm gonna enter? Probably not. All right. And it turns out this trade worked out quite well. It did work out quite well. Why was that? Because the target of this trade, obviously, immediately was just the range high. But what happened is actually, do you know what? We got better risk to reward. It did come slightly down. So about 1.8, still not great in my opinion. Especially because we were kind of almost at the range equilibrium as well. So what happened? Price did run. It ran. It did that. Okay. So that's what price did. So the risk to reward ending that trade, if you waited right until the end and if you didn't take any profits, even after you saw flipping market structure here, if you held it and held it for dear life, yeah, you would have got a 6x out of that. Yeah, you would have got a 6x out of that. But, you know, based on the way I trade and the way I read the charts, not all entries, not all setups are tradable. And in my opinion, that's one that I would, let go and say, do you know what? We'll catch it another day. All right. So that's that one gone. Now let's see. Did we have any other trades? I entered a trade over the weekend. I entered a trade over the weekend. Let's just see if we can find it. So obviously, what Price did here is Price, had another impulse up. No, I did not enter a trade over the weekend. I'll tell a lie. I didn't enter a trade over the weekend, but I came out of a trade over the weekend, and the trade I came out of was the trade I took at about, I think, 89. Yes, that one. So we were talking about that last week. So that trade was a very, very nice trade for me. I entered there and I came out right around, I think it was right around 98. So right around there. As soon as I started to see these wicks, these, buy rejection wicks, I said, you know what? I'm good with that. So my risk reward on that was quite nice. Let's say I entered around there. I put my stop loss at that low. As soon as we broke out of this range, I told you guys I put my stop loss to entry. And then that gave me a nice. All right, okay, no, it's not 100. Wow, that's crazy risk reward. Imagine if you caught a trade like that, huh? 107 point 107 107,090 risk reward. That is monumental. But anyways, the trade would have been like this. Okay, so it would have been a 6x, 7x. All right, so not bad, not bad. So that was a trade I exited. Okay. Now, as we can see, we've got more structure develop. Okay. And we've had some opportunities. I'm not going to lie to you. We've actually, in this range that we're in, or we've been in this range for quite some time. I'm going to go back here. We have had some opportunities, and I'm just going to talk about where the opportunities were. So, where could we have potentially entered a trade? Well, first of all, I believe we should have looked to enter a trade up here based on the way we trade, number one. Now, secondly, we also should have looked to enter a trade down here. All right, number two. And today, this afternoon, I entered a trade. I was actually at the barber's getting a trim. I entered a nice little short here. Okay, so if we have time, we're going to talk through each one and just talk about the reasoning behind each trade, and basically see whether it's something you also did. And if you did, congrats. Great, great, good stuff. I don't really think we can get credit for. Um, I let's see. Let me see. Let me see. Let me see if this is worth a congratulations. I don't know if we can take credit for this one. Let's see how it did. I guess we could. I guess we could. We had the right level. We had the right idea. We just didn't get the confirmation we would have liked. Okay, so I guess that's still a good trade. It's still a trade you should have entered. But there was a lot of reasons why you might have been on the bench for that one and sat at the corner. All right, so let's see trade number one. Let's talk about this. See how we could have entered that. So first things first, what am I seeing as we approach this range high? Well, first of all, I'm seeing that we have a series of high highs and high lows. Now we momentarily try and break structure here. However, these consecutive bear bars, these two bear bars, they do not manage to close below this prior low, meaning we have an SFP, which meant we got a rotation to the range high. Okay. Again, we weren't able to close, so we started creating these wicks. Okay, we started creating these wicks. Look at these wicks. Wick, wick, wicky, 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 wicky. Usually a wick like that means, well, if we have our standard bar and we have a big little wick, nice oxymoron. If we have a wick, it means, well, first of all, just think about it logically. So remember with your bar, remember this is your standard bar, right? This is your open. This is where price opens. This is your close. Let's say we had another wick at the bottom. This is your lowest price, which price rallied to. All right. And this is the highest price, which price rallied to. Okay. So what's happened here? So it's very clear. Let's just label it in for our beginners and for completion's sake. Okay. This is your classic trend bar. All right. So what's happened here? Well, very, very, very straight. We've opened. Okay. So we've opened. Price has come up. Price has gone all the way up to the high of the range of this bar. All right. It's tried to push. The Bulls have stepped in aggressively. And then something's happening. What do you think is happening right now? What do you think is happening right now? Look, the bar is coming down, almost like a syringe or like a pressure valve. It's coming all the way down and then it ends up closing here. Do you think that's bullish? I don't think so. That's not bullish. That is quite bearish. That means that we've had a lot of selling from the high all the way to what we have here. That's why bars like hammers on dojis they can be interpreted based off of that, but it's pure logic. So what we've got here is we can see similar things here. These buy rejection wicks, buy rejection wicks, buy rejection wicks. What's that telling us? That's telling us that in this transition up, there is some selling pressure. Someone is selling, and volumes, high volume players are looking to push the price down. And usually, what happens when you see that is you have a range develop. Makes sense, right? Because we've gone from the cause to the effect to another cause, right? Cause, effect, range, impulse, range, impulse, range, impulse. That is the heartbeat of any market. That's the fingerprint of any market. So what we've got here now is we can see that price is doing all this. So I'm looking for shorts here, to be honest. I'm looking for shorts. Not only do we see that, we got a nice little range develop in blue. Okay. Now the question is, did we get a confirmation at the range high? So we're looking to see, can we plan a short and look to enter a short right around there somewhere? If not a short, a short, but that wasn't a short right around there. But to do that, we want to see nice, flipping market structure. So we're waiting, we're playing the market structure on the 5 minute. Okay, we can see that, oh, yes, now the high has been taken. All right, we've traded above this high. Now, what are we waiting for? Now, very clearly, we are waiting for our last higher low to get reclaimed. And now that's where it's starting to get a bit techie, as you would say in the UK. All right, it starts to get a bit techie because this is obviously your imminent higher low. All right, which if you staircase comes down here, but also this is your main high-low. All right, this is your main high-low. And what I mean by that is if you follow the structure up, we've got higher high, higher low, higher high, higher low, main higher low, higher high. But you also have this internal structure here, which is kind of internal and external, in my opinion, where you have higher high, higher low, higher high. I'll put that in a different color so you can see it clearly. Let's make that blue. All right. Oh, no, let's not make it. Let's give it something a bit more spicy. Give it orange, make it thicker. All right. So that's what we have internally. So internally, what then happened? Well, did we get a flip? Is the question. Are we going to lose either this level or that level? That's what we're waiting for. Nope. Nope. We're waiting. Bang. I think now we have a close. Okay? And the reason I've waited the reason I haven't classed this as a close is something that, you can learn about in the course, and it's something you can learn about during boot camp. All right, so we don't class this as a close until, we get something that looks like this. This is where you might say to yourself, I'm either going to enter a short here, but then alarm bells must be going on in your head. Oh, if I enter a short there, what's the risk to reward saying? It's not very good, is it? It's not very good. All right. Or you can say to yourself, all right, let me wait. Let me be trading number 2. Let me be the patient trader. Let me see if we get a retracement on the way up. Sometimes we get a retracement. Other times we do not. So what we have here is, we have a retracement. It's coming. It's not that deep of a retracement. Let's just see if it goes any further up before it decides to drop into the abyss. All right, yeah, that's it. So this is the best entry you would have gotten. That one is if you maybe waited a bit more and you managed to enter here. All right, again, risk reward, it's not special, nothing special. It was just a scalp, nothing special at all on that one. All right, but that's just aiming for that range low. Now, that's not to say price is going to stop at the range low, but anyways, that's how you would have entered that trade. Another thing you could have done on that trade, now if you're a bit more experienced and you're familiar with market structure, is you could have said, okay, why don't I trace it internally? And as soon as we break, look to enter on a chain. So we've got lower high, lower low, lower high. I believe that's a lower low. Okay, then we have a lower high before that drop. So what you could have done is you could have said to yourself, actually, no. Do you know what? No. It just wasn't the best entry. Like, that little curve there is also quite worrying. And it's not usual price action. This really not usual price action because this is starting to look bullish. This nice little curvature effect is starting to look like it wanted to do that or wanted to do that. All right, so I'm not gonna. It's just one of those where if you entered, yes, I hope you got out early, and if you didn't enter, don't lose sleep over it. It's one of those. All right. So the next trade was this one over here. So now we're obviously coming to our range low. All right, this is a nice little commentary and kind of my thought process of how I enter these trades. So we're coming to our range low. As we get to our range low, we've done something that we expect to see. What do we expect to see? Well, if we carry on with our market structure drawing, we have a lower high and a lower low. And not only do we have that, we've also closed market structure. This becomes a decisional point, which we need to close above to enter this trade. And let's see what does price do. Does it give us that? Yes, it does. Look at that. We get a nice little close. All right. So here you would have looked to enter a trade here. All right. However, you need to follow your market structure. And this, I can't emphasize this enough, especially for those of you who watch these videos religiously. Planning your trades and having your confirmation and entering your trade is half of the job. You also have to monitor the price action to see how is price developing. Is it time to exit that trade? Now let's have a look and see why that's the case. Well, yes, we've entered a trade here right now. All right. So for demonstration purposes, I'm going to put that trade up. So let's say we entered a long. Let's say that was a retracement. Happy days. We're aiming for this range high. Yes, we are. That doesn't mean price is going to do that. Price is going to do what it wants. Remember that price is a accumulation of buying and selling in a market. Yeah, price is basically the action or the visual representation of people's actions. Now, back in the day, it used to be just small groups of people. Now it's massive computers, it's electronically traded funds, it's algorithms, and it's just a combination of different influences. But what you're seeing here is it's human action. It's basically individuals or groups, clicking to buy or clicking to sell in the market. Now, why do I emphasize that? The reason I emphasize that is just like the way when you trade, you enter a trade and you see some profits and you say, do you know what, I'm out. You sell, price goes down, right? It's the same way these groups of individuals act within the market. So what does that mean? That means price is somewhat, it's I'm hesitant to say it's somewhat random because there are some patterns and probabilities to it, but there is an element of randomness to it. And once you appreciate that, you know that you can enter a trade, and even though it's a good trade, it's in profit, it's in 10 grand, 15 grand, 20 grand profit, you still have to monitor that trade. Why? Because behavior can change and the consensus can flip at any single point. So, what do I mean by that? Well, just because we've entered this trade here, all right, and then we've got a nice bullish break of structure, great. Some of you are like, yep, I'm good. We're going up to the range high. It's a done deal. But look what happens here. If we go to the 5-minute chart, the exact same time frame where we got that break, look what happens. All right, so price creates another. So if actually what I will do is I'll say this. This is obviously our higher high, our break. Price carries on to do a higher low, and then it gives us another higher high. And then what do we expect? Conventional, especially beginner traders just think they assume we're going to get another high low, high high, high low, high high, high low, high high. Bob's your uncle, trade 10K in the bag, done. But no, what did Price do? Instead, Price said, yes, I'm going to give you a nice cheeky, let's see how much it was. A nice cheeky $460 move, and then I'm going to break structure against you. So look what Price did there. We got a flipping market structure there. Bang! All of a sudden, this means this becomes your new target. So this is actually not a bad place to enter a short. But you won't have been able to tell that if you weren't monitoring your trade. So this is why I say always monitor your trades. Okay. So here we go. Price gives you that break in structure, gives you a nice retracement here. So you should have been saying, right, this is a great chance to enter a short. Enter a short there, and I'm looking to drive that down all the way back here. But if you did enter that initial long and you didn't watch your market structure, guess what? You would have lost that 1% there, assuming you only risked 1%. All right, but if you saw that, you could have definitely entered on that 5-minute flip, and you would have not only made about maybe what was that? You would have made a 0.4%, so half a percent. You would have been able to come and test it down and make about an 8% on the move down. Okay. And why did I say that was going to be an 8% move? Because we didn't even get a flipping market structure here. So that means we weren't going to react off this range again, and we broke down from that range. All right. So I hope that helps. I hope that clarifies how you should view market structure and how you should trade these charts. Entering a trade is half of the job. You have to monitor your trades. All right. So that was trade number 2. We don't really have time, but I'll see if we can talk about trade number 3 as well. Now, what's going to really annoy me is if the recording hasn't, if this recording hasn't been done properly. All right, so what we have here now is we can see, okay, now our internal blue range is done. We've broken out of this range. All right, we've come down here, and that looks like this. We have our structure looking like this. We came, bang, we broke out of this range. This is a range break, internal range break, right? But you have to realize we still have our bigger range in gray. They still have that bigger range in gray. And price was so annoying. Price was so annoying. Why? So annoying because I was watching this for a nice, juicy play. This would have been a very juicy, magnificent, voluptuous play, this one. Why? Because as price was coming down to our range low, this gray line, all I wanted to see, was a nice little wick. So if price had come down like that, giving us a wick like this, that obviously traded lower than this wick, oh my goodness. With this transition in market structure, I would have been in this one. But however, you know, we didn't quite get that. Instead, price kind of hesitated on the way down. It came down, lower low, lower high, lower low, lower high. It didn't even sweep this prior low, and then it broke structure. All right. And why was this annoying? This was annoying because I was waiting to enter that short. I was ready. All right. So this is what we had. This is internal structure here. So we didn't really get a break until up here. All right. So we didn't really get a transition in structure until we flipped structure here. Okay. Again, why is that not great? Why did I like that? Well, risk to reward. What we've just been talking about, risk to reward is we've lost half of our range already, before we got that break in market structure. Yes, we got a retracement. Okay, yes, we got this retracement down here, but it's just unless we came a bit low, we didn't even mitigate an internal range there. See, I was waiting there for another mitigation. We didn't even get that. So really annoying, really annoying. But it happens. It happens. You move on, you plan for your next trade, and you keep it stepping. All right. And also, we could see here that we had this nice trend line of curved liquidity, showing us that price was. Remember, we talked about this last week. Look at that. Price was about to give that nice little juice up, but we didn't quite get the confirmation we wanted. But I will say this. Now, if you remember remember I told you guys a few months ago about this indicator called Market Cipher. Well, let's see what Market Cipher had to say about this move. Well, Market Cipher showed us here, all right, if we simply just zoom into this region, okay, it showed us here that there was a clear entry. As price was creating lower lows, what was Market Cipher doing? It was giving us higher highs and a momentum. So here we can see price is rallying down, but our indicator is giving us a nice bullish divergence, and our money flow is giving us a nice juicy curvature. All right. That's what we like to see. And yes, we did get that move up. Now, I would have loved to see all of this just after we got that wick. That would have been nice. That would have been very nice. Okay. But anyways, that didn't happen. And the moment that didn't happen, not only was I thinking, this long may be short lived, I was also thinking we may potentially come back for this range low. Why? Because we haven't tagged it. We've got the guys who longed here. We've got the guys who longed here and they put their stop losses here. They're still fine. They're still fine. We haven't engineered the liquidity, in order to justify a move all the way up. So we can't really justify that. So as a result, I said, you know what? Why don't we look for a short? We're going to look for a short in premium. And that's exactly how we entered that short there. And that's a short I'm still in right now. I haven't moved my stop loss to entry. I probably should soon. But I'll just talk to you about how I got into that one as well, so that you guys have a bit of a case study moving into the week or moving into the next few weeks. All right, so again, let's look at the market structure. So obviously our range comes up. We have a series of high highs and high lows. But as far as our structure goes, now forget everything else. Forget everything I've said over here. In fact, let's get rid of all of it. Now forget all of this. We've got about 3 minutes to go over this. And hopefully I do it in time. So forget all of this, right? What does our structure look like? Let's go to the 1 hour. Yeah. What does our structure look like right now? Well, on a 1 hour, this is our 1 hour structure from the top. Lower low, lower high, lower low. What could we potentially get? Well, a lower high for a lower low. That's exactly what we got. Not only did we get that, we actually had a very nice play here. Why? Because we didn't manage to close above this level. You can see clearly we just SFP it, which means we'll maybe getting a rotation down there. And also, we had this internal range here, all right, that actually helped as well. So, yes, it looks like a close on this internal range. But again, remember what we know about, manipulation. We could get manipulations trapping the people who long here, okay, and also just creating that fuel to drop down. That's exactly what we got. So I was aware of this downward structure. This is why I said I'm going to look for a trade here. And funny enough, I entered this trade quite late, all right, because this is what happened. This is what happened. So price came up here. As you can see, these are my drawings from earlier today. And I said, well, I can't really justify a trade here until we lose this level, even though Market Cipher is telling me get in. Market Cipher is telling me we've got price coming up, momentum coming down, money flow coming down, bearish divergence. It's telling me there's going to be a turning point in price bearishly. All right. But I waited because I said, I'm not going to, excuse me, sorry about that. I said, I'm not going to break my rule and I'm going to wait. And bang. But we got this really aggressive move down. So we got this flipping market structure down. So for those of you who are struggling to follow what I'm saying, we've got higher, high, high, low, high, high, breaking structure. So what do I expect now? Well, the expectation of order flow is undoubtedly a Nice little retracement for continuation. Remember, that retracement doesn't have to come all the way up. It could just tag this old range and drop. So what happened then is I said, I was in the barbers and I said, you know what, this is not coming up. So I waited for us to break structure again here. The moment I saw this, that we got a break here, a move there, and then another break, I said, I'm not missing out on this move. No way. No way. So I entered here. Um, I entered here and I'm still in that one. Obviously, it came down to about here. I saw the profits. It was looking nice and juicy. But I left it. Obviously, price has now come back up. So we've lost almost 50% of those profits. But, we've broken down from this range, although not decisively. It's just a tiny break compared to this low. But there is a chance. There is a chance that we have another leg down. Of course, there's a chance we go up and break structure. Why? Because we may simply be deviating this low. All right. But that's kind of what we're going to do today. Today is more of a commentary of what's going on, what's happened over the weekend. And that's how I've played the markets so far. So maybe I will do another video or maybe just a picture. I'll do a picture giving you guys the levels. Oh, this looks way nice. Look how fresh that looks. Wow. I'll give you guys a picture, giving you guys the levels I'm looking at. But I won't be able to run through that in this video because I just don't have that time right now. All right. But anyways, hope you found this useful. Don't forget, if this is your first time here, welcome to the family. Don't forget to hit the subscribe, boost, follow, hit me up on YouTube. Remember, we're trying to get to 500 followers by the New Year's, and I know we can do that. So yeah, hope you guys are trading really well. Don't forget to put your profits, all the profits you're making, and I know you're making profits because there's no way you're not making profits with these signals because these signals are on point, right? So make sure you're putting your profits on Trade Journal, the Discord. There's a profit wall. Put your profits on there just for us to see. And it just makes me glad. It makes me glad when I open Trade Journal and I see, right, someone capitalized off of this. Someone's watching this video and someone made some money today. All right. So we'll leave it there. I hope you have a blessed week ahead and I will see you next time.